Have you ever thought about what it would be like to win the lottery? Maybe you've dreamed of quitting your job, buying a mansion, and living off the grid. Well, it turns out that winning the lottery isn't the only way to get rich. In fact, there's a mathematical formula that can help you grow your wealth over time. And it's surprisingly simple. This formula is called compounding, and it's been described as the eighth wonder of the world. Just think about it. By following this formula, you can watch your money grow exponentially over time. That means that a small investment today could turn into a huge sum of money tomorrow. Imagine planting a small seed that grows into a giant tree, bearing delicious fruit every year. Or picture a small snowball rolling down a hill, gaining size and momentum until it becomes a massive avalanche. This is the power of compound interest. But it doesn't have to be complicated. In fact, you don't need to be a financial expert to understand it. In this video, we'll break down the math behind compounding so you can see how it works. And we'll show you how you can use it to grow your wealth over time. To start, let's take a look at a few examples. First example. Imagine you have $10 and you want to grow it. Find a bank that offers you an annual interest rate of 10% on your savings. That means that after 1 year, you'll have $11. After another year, you'll have $12.10 and $13.31 after 2 years. It's a slow process, but you're steadily increasing your money. Now imagine doubling your initial investment to $20. With the same interest rate, you'll have $22 after 1 year, $24.20 after 2 years, and so on. You can see that the more money you have, the more money you make in interest. Next, let's increase the interest rate to 20%. With $10, you'll have $12 after 1 year, $14.40 after 2 years, and so on. And with $20, you'll have $24 after 1 year, $28.80 after 2 years, and so on. You can see that the higher the interest rate, the faster your money grows. Now let's take it up a notch. Imagine investing your money in something like stocks. On average, the stock market has returned around 10% annually over the long term. Let's say you invest $10,000 and let it grow for 10 years. With a 10% annual return, you'll have around $25,940 after 10 years. That's a nice profit, but it's not life-changing. Now imagine investing $10,000 for 20 years. As you can see, compounding works best when you have time on your side. The longer your money is invested, the more it can grow. But that's not all. The beauty of compounding is that once you start seeing returns, you can reinvest that money and watch your wealth grow even faster. That's because when you reinvest your earnings, you're essentially buying more of whatever you're invested in, which means you'll earn even more money in the future. It's like a snowball rolling down a hill, picking up more snow and getting bigger and bigger as it goes. For example, let's say you invest $10,000 in a stock that pays a 10% dividend yield. That means you'll receive $1,000 in dividends each year. If you reinvest those dividends, you'll buy more of the stock, which will earn you even more money in the future. Over time, this can lead to exponential growth in your investment. In addition to reinvesting your earnings, you can also continue investing more money over time. That means that instead of letting your wealth sit idle, you're putting more money to work and watching your wealth grow even faster. But how exactly can you take advantage of this powerful force? Well, let's take a closer look. First, you need to identify a good investment opportunity. Compounding works best when you invest in assets that have a high potential for growth. That means looking for companies that are likely to grow in value over time, or assets like real estate that have historically appreciated in value. Next, you need to invest consistently. The key to compounding is to stay the course and keep investing over time. That means setting up automatic withdrawals from your bank account to your investment account, so that you can invest regularly without having to think about it. Finally, you need to be patient. Compounding takes time to work its magic. Don't expect to get rich quick. Instead, focus on making smart investments and staying the course over the long term. The power of compounding is truly amazing. Just imagine starting with a small amount of money like $10 and turning it into a fortune over time. It may seem like a pipe dream, but it's actually possible if you follow the right steps. And the best part is that you don't need to be a financial expert or have a lot of money to get started. With just a little bit of knowledge and discipline, you can harness the power of compounding and watch your wealth grow over time. So if you're ready to take control of your financial future and start building wealth, it's time to learn more about compounding and start investing today. So let's dive deeper into the science behind compounding. Mathematicians have developed sophisticated formulas and models to calculate the growth of compounded interest. One of the most common formulas used to calculate compounding interest is the following. Suppose you invest P dollars at an annual interest rate or compounded in times per year for T years. In that case, the amount A of money after T years is given by the formula A equals P, 1 plus RNNT. Another model used to describe the growth of compounding interest is the Rule of 72. The Rule of 72 states that to determine how long it will take for an investment to double in value, we divide 72 by the annual interest rate. For example, if you have an investment that earns an annual interest rate of 6, it will take approximately 12 years to double your money. These formulas and models help investors understand the growth potential of compounding interest and make informed decisions about their investments. By understanding the science behind compounding interest, investors can make better financial decisions and achieve their long-term financial goals. You may be wondering why it's important to understand the science behind compounding interest. Well, it's because understanding the principles behind compounding allows you to make more informed decisions about your investments and financial planning. By understanding the factors that affect compounding interest, such as the annual interest rate and the frequency of compounding, you can optimize your investments and maximize your returns. Additionally, understanding the Rule of 72 and other models can help you predict how long it will take for your investments to grow, which is essential for long-term financial planning. So whether you're a seasoned investor or just starting out, taking the time to understand the science behind compounding interest can pay off in the long run. By the way, if you're enjoying this video, please hit the like button. If you're not already subscribed, please do so now. Now let's talk about some practical ways to start taking advantage of the power of compounding. One way to do this is to start investing in index funds or ETFs. Index funds and ETFs allow you to invest in a diversified portfolio of stocks or other assets with a single investment. This can make it easier to invest consistently and benefit from the growth of the overall market. Another way to take advantage of compounding is to invest in real estate. Real estate has historically appreciated in value over time, and rental income can provide a steady stream of cash flow. Consider investing in rental properties or REITs, which allow you to invest in real estate without directly owning or managing properties. Finally, consider investing in yourself. One of the best investments you can make is in your own education and development. By investing in your skills and knowledge, you can increase your earning potential and improve your quality of life. Take courses, read books, and attend seminars to learn new skills and expand your knowledge. No matter how you choose to invest, it's important to remember that compounding takes time and patience to work its magic. Don't expect to get rich quick, but with a little bit of discipline and a long-term perspective, you can harness the power of compounding and watch your wealth grow over time.